Well, the stories of some of these big investors are starting to follow a familiar pattern. Yes, they had their suspicions about Theranos and Elizabeth Holmes, yet they still invested their money. Were they motivated by a fear of missing out?
Why did investors invest in Theranos? Was it the VIP cap table, the hyped company, or the question we all ask ourselves? Why could this happen?
It is so fascinating.
Yeah.
It is so fascinating how this 19-year-old girl could start a company, have zero product, and be hyped, sitting with, the president of the US, being on the front of Forbes, being an $8 billion company, and nothing. It was all just a big lie, a big scam, a big fraud.
Only to find out, like, the investment was worth nothing.
Exactly. We're talking people who put in $100 million.
That's crazy.
Without checking underneath the...
Yeah, this is a spectacular case. And we had the first episode about Elizabeth Holmes and Theranos. And we have a follow-up episode.
Yeah.
So stick through.
Because now we're going to ask the questions that everybody wants to know.
Yeah.
All the conversations, you'll have the answers now. What are the excuses? The investors who did not do a due diligence, they did not investigate, they did not check it out.
Yeah. How could they?
How could they put in 100 millions in blind faith? And we're going to look at it now.
Yeah. So stick through. And in this episode, you have our business lawyer, Kat, with over 17 years of experience, and me, Ida, the host of the channel. I've been a communication strategist for 15 years, and together we've been entrepreneurs for 20 plus years.
Or scaling companies, some more angel investor coming in like that. But yeah, so we're going to share our experience as a lawyer. I see investors, I hear what's happening behind closed doors.
Yeah.
And that's why we're going to really dig into how could you put in trust a founder so much they put in 100 millions without looking, without finding out the details, without realizing that it's all just a joke.
It's all a joke. So the first one, we trusted the people around the company.
Yeah. And this one is lethal. She had Henry Kissinger and George Shultz on the board. She had super rock stars on the board.
Wow.
And people bought that as credibility. I would buy that as credibility.
Yeah, me too.
Yeah, it's so dangerous. So one of the reasons people did not check, because they were hurrying to invest, was because there were so many famous people. And that's social proof. That's not validating a product or a business case.
Now you know that. Number 2. But we didn't want to miss the next big thing.
The dangerous FOMO.
Yeah, really dangerous.
Yeah, and again, guilty. I've been subject to FOMO for sure. Because she was so hype and it was so secretive. It was such a disruptive. This blood sample test, a little blood sample, you could find out like everything.
Yeah.
So far beyond what we have today, that you didn't want to miss.
Of course not.
You didn't want to ask too many questions. You might go with another investor. You have to hurry to join.
Yeah, and this was also, we're going to change the world idea.
Yeah. So, FOMO, you stop thinking logically because you don't want to miss out.
No.
You want to go with the herd. Super dangerous. Pause, think, do I know what I'm getting myself into?
Yeah. Number 3 was the founder was unusually persuasive. But she was. She was, at least she was special. Some say she was really awkward and some she was a super networker. I would say for sure she was a brilliant networker given where she came. Without any product, without anything, she built a stack of cards. She must have done something right to get investors to invest in her. To get in the front of Forbes, front page. Come on. Yeah, come on.
Yeah, she was on TV, she was popular, everybody hyped her.
Yeah.
And, we invest in founders. We do. I, as an angel investor, invest in founders. I, as a business lawyer, back up charismatic, crazy A-type founders when they get in trouble. When people want to name and shame them in TV, I step up and I defend them.
So
But.
But.
There is a limit. Type A, yes. Quirky, yes. Innovative, yes. Super network worker. But fraud, scam, lying, cheating, borderline or even psychopath.
Yeah, this is serious crimes.
Yeah. So we need to take a step back. If somebody's really lovely to speak to and you're so impressed,
Yeah.
perhaps you should speak to their team.
Yeah, super good idea.
Perhaps you should probe that team a bit. Like, how is she? Do you work late at night? Has there ever been a huge challenge? How was that? How did she handle that?
Yeah.
Because history shows that she was quite nasty towards the team. It was a harsh culture. She did not accept being questioned. She had people fired or made sure people quit if they were getting too uncomfortable.
Yeah.
So there were signs. So if somebody's amazing, perhaps we should take references or seek some other information.
That's super good. Number 4 is secrecy is very normal in this cutting edge tech.
It is.
What are we going to say?
I've invested in companies that I don't know anything about the technology.
Really?
Yep. Even companies that work with blood samples, but that's off there. Humanity.
Yeah.
But anywho, so secrecy is still not good. You can sign an NDA. You can verify. And of course, that depends if you're a small angel investor, right? Yeah. But we're talking big money here.
Yeah.
We're talking significant stakes or taking a position in the company. Make sure you either understand, sign an NDA for God's sake. If they can't share, should you really invest? The NDA means they can share it with you, the information.
Of course.
So, warning sign.
Warning sign.
Yeah.
Number 5 is that you relied on others' due diligence.
And this is so fascinating.
Yeah, it is.
When I did the research, I sit up late nights before every episode.
Yeah.
But this one, I was trying to find out from all the big famous investors, what was the legal firm that did the due diligence for them?
How could this happen?
And basically there were none.
That's super.
Yeah. Walgreens, who also invested and made a partnership,
Okay.
they had an expert within bio, within medtech, that did some questions, sent questions, got answers, kind of accepted it. But nobody really did the proper due diligence, the proper investigation. And imagine putting money like that.
Yeah, just letting go.
Yeah, because they assumed somebody else had. So that's super dangerous. Just because big names are in, don't assume somebody else did the proper groundwork.
And that takes us to number 6, which is it wasn't our role to validate the science.
Again, your money, up to you.
Yeah, of course.
But you don't want to support a fraud,
No, you don't.
No. You cannot rely on audit or experts. You need to make sure you take responsibility and understand it. Make sure you see the actual agreements. Make sure you see the actual numbers. Because they did have Walgreens, but they inflated the numbers like hell.
Yeah.
So be careful.
Be careful. Number 8 is regulation would catch any major problems.
I understand. You think so. They're compliant, right?
Yeah.
But we cannot assume that. Auditors, regulators, they have their limits. So we cannot assume. Often they find out post-fact when we already have the fraud case and the litigation.
Wow. So now you know how the excuses could sound like.
And did sound. These are authentic excuses that came after it all erupted.
Wow, that's super impressive. Thank you so much for taking us through this one.
Super interesting. And big business mistakes.
Big business mistake. Remember, this is not legal advice, it's knowledge sharing as always.
We're in your corner. So share your mistakes. We'll share the fun facts and the scary facts.
Yeah, we do. Until next time.
Hej då!
Hej då!